HIN stands for Holder Identification Number, and it's unique to Australia. We believe investors in Australia should all have a HIN. It avoids you having to put your positions into a custodial or wrap platform. We've got to go back a little bit in history to understand that. And we go back to the 90s when wrap platforms were first developed by banks, and they were developed as a way to consolidate client assets. But back then clients were investing predominantly in managed funds, and managed funds are not a listed vehicle, so could not be held via a HIN. Fast forward to now, and there are much more listed options for investors that can be held via a HIN. So now, via that asset selection, you can get much greater diversity across your portfolio, all via HIN-enabled products. We think the alternative are managed accounts, and specifically managed accounts held via HIN, where you reduce the layers of fees that we see in custodial wrap platforms. Platforms have what we call 5 layers of fees. So if we go through those one by one, there's an account keeping fee, and that's just a fixed dollar amount, could be $400 or $500. There's a FUM fee, which is a basis point fee based on the value of your portfolio. We then have cash skim fees, which have become very controversial recently, and they're just the provider dictating that you must hold cash with them for investments, but taking a margin off that for you. You then have brokerage fees, where they bulk transactions out to a large provider, but then split them out and you're charged a retail rate on those transactions. But worse still, in many cases transactions are netted, so there is no transaction being sent to an exchange, but clients are still charged for a transaction. And then finally you have fund manager fees or model fees to the provider providing the model portfolio. HIN avoids many of these costs. It's direct holder, so you don't need to put it into a custodial or wrap platform. You can hold it directly in your own name, so you don't have custodial fees. It also lets us provide a much cleaner, simpler structure of a single upfront fee to cover those 5 layers of fees that I previously talked about, but at vastly lower rates. Importantly, FinClear is a wholesaler. We don't touch retail end clients, so we're not in conflict with our financial planners or banks or brokers. And importantly, we own our whole infrastructure stack. So meaning from the exchange to the investor, there are no other touch points, or we don't rely on other providers for pricing within that stack. So that allows us to provide very competitive pricing.